Hey guys, we're going to look at the GameStop report from Gary Gensler. What happened according to Gary in February? Let's go ahead and take a look at his story here. I'm going to blow through this. If you'd like to read through the individual slides, go ahead and pause the video. I'm going to sum this up pretty quick because it's a whole lot of bullshit. Right, Gary? Take it away. Yeah, that's creepy. Okay, so chapter 1. The underlying causes of the meme stock phenomenon that are unrelated to market structure. You heard that right. Unrelated to market structure. Has nothing to do with it. Are a subject of speculation that is beyond the scope of this report. So basically from the first sentence, we can tell him, or he's telling us basically that it's beyond the scope of this report, that anything relying to the underlying causes are not going to be discussed in this report. So this is just a fluff report that's going to give you, basic information about, meme stocks, that how there was more than 100, how the total shares outstanding of short interest exceeded the market average when, there's a lot more going on than meets the eye as far as what they're trying to explain here. Now, Gary, of course, likes to ignore the fact that GME had a short interest of 140%. I don't even need a source for this because it's common information. And it basically goes to say large price moves, large volume changes, how, retail's basically the problem for coming in, and how the massive amounts of volume, despite the marketing efforts by Robinhood and Webull that, drew a lot of people into these trading apps, caused all of this problem activity in the market. Takes, the spotlight off the institution, puts it on retail. Basically, it's crime. They try to blame YouTubers and Wall Street bets. They're basically not taking any responsibility for what happened. But why would they? Then they show us this cute little graph of the volume of GameStop that traded in 2020. But who wants to see a graph like this when the graph we should be seeing is this graph, the one showing FTDs from 2005, over millions of shares from the beginning since the UTP plan was created, that GameStop has been a part of. He doesn't want to show this stuff because, that would be, what is it, Gary? What is it? That's right. That's crime. We don't want to actually find crime. We just want to talk about crime and not do anything about it. Anyways, GameStop shortage ratio, they talk about it. It was 84% reportedly in April 2020. Then they talk about it going up. They talk about the price increases from GameStop in January, how it went up, basically from $20 a share, $19 a share, all the way up to 43 to 72 to 347 to 483, and then trading was halted, and then they stopped. Okay, I'll let you finish, Gary. Jesus Christ. Overall, GameStop's intraday share price increased 2,700% basically from its intraday low on January 8th in a nutshell. So from January 8th to January 28th, the share price increased 2,700%. Whoa, that's badass. Now, anyways, the daily closing price changes by the end of January were also highly volatile in dollar terms, likely to do with, the halting of trading, right, Gary? So the increases coincided with the sharp increase by the number of individual accounts actively trading on GameStop, as you would expect, Gary. With more volume comes more trading. With more trading comes more volume. It's, common knowledge, Gary. Now, anyways, figure 4, daily count of unique cat accounts. So get this, the cat account, we've all had them. Simulation confirmed, the cat system, always been the cat system. Because back in, January, we had the consolidated audit trail. So, because the source is from the cat. Unless they were able to backdate some information, and that's what they were waiting on to deliver this report. Who knows? Anyways, look, they mentioned AMC. They go through all of the popular meme stocks, quote unquote, back in January on this slide, and they do mention AMC right there. See it? It's underlined just a little. Just a little. So now they talk about institutional investors and large hedge funds. They talk about how they could have covered due to the large buy to cover volume, yada, yada, yada. They talk about this shit, how it's hovered around 100%. Gary, it's more than that. Come on, bro. Anyways. Then they talk about costs, AMC, Naked, Express, all those fun stocks that are, retail manipulated because of volume. It's all volume related. It's nothing else. Nothing else. Seems to be all around the volume. They were talking about how some funds had closed out their short positions in meme stocks. I like how he says some funds. You sly bitch. Anyways, some funds that were long GameStop saw significant gains. No shit. Yet while the swings in GameStop's share price and volume attracted significant attention, they were not unusual for January 2021. For instance, KOSS, AMC, Hey, look, there's AMC again. Naked, Express, all had the similar effects happen to their stocks. AMC, just a little bit. Talks about it just a little bit. Just a little bit. Chapter 3, impacts on ETFs. No one gives a shit, Gary. If you want to read this, go ahead. Talks about XRP, or XRT, rather, sorry. Talks about GAMR, ETF for GameStop. We know a lot more than this is going to talk about as far as my channel and ETFs. So nice try, Gary. Short selling and covering short positions. This little area is cute. This one, again, he talks about it hitting its high of 109.26% of short interest, which again is not enough because GameStop at the time was notable for a significant short interest, according to Gary. Figure 5 shows GME's short interest over time, along with average levels of short interest among other non-financial common stocks. In the past, GameStop had several periods of high short interest, but none as high as levels achieved from 2019 to mid-January 2021. It hit 50% of shares outstanding first in 2012, then again in 2015, then again in 2016, then again in 2018, before rising even further in 2019. From then until early 2021, GameStop short interest hovered around. No, Gary. More than that, bro. What about the institutional ownership at 200%? Where's that talked about, man? Come on, dude. What are you doing? We're going to talk about the rest of it later. That's basically it. I'll talk about the Apex clearing side and the the clearinghouse side of it next. And that's it. This is a piece of shit report, Gary. It's dog shit wrapped in cat shit.